Good morning, everybody. Welcome to today's Traders Mindchat Show. Today, we're talking about how I grew my account 13% in one day. That's right. It wasn't just a trade, it was the entire account. And the reason why I wanted to share this with you was because it came up in discussion yesterday. So we had our mindset webinar yesterday for the trading mind wheel, and we took a lot of questions. One of the questions that came in was from Mickey, and Mickey said that he would love to see a real life example of a trade that you took notes on from start to finish, meaning before you ever even made the trade. And so I wanted to share this example with you because the way that I was able to put on this trade was through preparation, through having developed mindset, skills, all these kinds of things. You're not going to be able to go into a trade and make money and keep the money without having certain mindsets and skills in place. So I want to walk you through the full trade from soup to nuts. I want you to ask lots of questions about it along the way. I'm going to do my best to share everything, but please hold me accountable, post into the comments, and let's hop on into it. Okay, so here is the trade. The trade is in Nvidia, and I want to walk you through this step by step. So the trade started on this day here, back on September the 24th. And what I noticed on this day was towards the end of the day, and we'll come over here, and I typically have my charts set up on TradingView in this way, where I have this chart up here, which is the monthly chart. I have a weekly chart, I have a daily chart, and I have a 30-minute chart. So I'm looking across time frames on my charts, and it gives me a great perspective, especially when I'm going to take shorter term intraday trades like this one happened to be. Now, this one I did hold overnight. I held it as a short-term swing, and that was the intention of the trade going into it. This is worth noting. It's important to set the intention of your trades before you go into them. So that way you already know that, oh, this is something that I plan on holding for a little while, or this is one that I plan on selling rather quickly. Now, that can change after the execution. But if you go into it already knowing what your plan is, what your mindset is going in, then that's going to be something that helps you manage the trade. And that's one of the things that helped me manage this one. And yeah, not only go in heavily, but to be able to go in with size and manage risk fairly tightly. So on this day, and we'll keep up all the time frames up for now, but we will blow up some of these. All right, so on this day, Nvidia breaks out. Right, actually, what was it? Yeah, well, it was here. Nvidia breaks out, and it starts to move sideways. And at the end of the day here, I'm buying calls. At the end of the day there, I'm buying calls. And why would I be buying calls? The reason why I decided to buy call options, and I'll tell you exactly what calls I bought and the expiration dates and all those kinds of things. But the reason why I bought calls on this, it starts with the chart. It starts with the chart. So I see this breaking out. It's already on my radar. It's not something that I picked up from some dude on X or StockTwits or wherever. It wasn't something that I heard on IBD. It wasn't something that that I heard on the news. It was already a stock that was on my radar. It was one that was on one of my watch lists. But I see this move happening, and I take a look at where it's at. So I have a couple of trend lines here, right? This is a trend line. There's all these little marks that say SL. For me, that just means simply that it's a sector leader. We could talk about sector leaders later on if you want, but I like to flag every time that a stock is a sector leader. It's one of the things that puts the odds a little bit more in my favor when I'm looking to make a trade. So I draw this descending trend line, or that descending trend line actually was already there. I had drawn it before. So I see how price is starting to break out over here and push above some resistance from back here. So let's draw a little line over there, right? So there's that little line. And let's get rid of that for right now, right? So I see price breaking out and it gets above it right at the start of the day, right? And let's sync that new line across time frames. So price breaks out, it holds the line the whole day, and then at the end of the day, notice what it's doing. Now let's zoom in on the 30-minute. At the end of the day, price is pulling back and then it reverses and closes on its high. It does that on increased volume, right? So it's not just like, oh, look, volume is up over here. I like to look at this kind of volume, this indicator that I've got down here, because it's telling me the average volume for that particular point in time. So it's looking at this happened during the last 30 minutes of trading, and it's telling me that relative to the last 30 minutes of trading, volume is up, right? So it's relative. So volume's up versus the yesterday versus the day before that, before the day before that, etc. Normalized, I think I've got it set to over the last month, right? So uptick in volume like this. So I buy calls here, and I buy at the money calls. I buy at the money calls because I want it to move very similar to the stock. I don't want it to be out of the money. Could I have made a little bit more money with out of the money calls? Sure. But the reason why I wanted at the money calls is because I wanted this thing to move very similar to the stock. Now, what expiration date did I buy? I bought it about a month and a half out. I believe I bought the what month we in? We're in September, October. I bought the November calls. November calls expiring like the second week of November. And the reason why I did that, the reason why I bought it with a whole bunch of time value in there is because if price didn't move up right away, right? So I bought here. In fact, let's add that mark, right? Well, let's get rid of that silly thing. Bought here. So I'm buying the calls at the end of the day right there. And I'm buying them with about 6 weeks worth of time value. The reason why is because if price dropped, then I would still have plenty of time value in there. I wouldn't have lost the entire value of the calls, and I still would have plenty of wiggle room. It would still move fairly close to how the stock was moving. And if I held through that, if I held through it and price came in and fell apart, My worst case scenario would be losing 4.5%. 4.5%. That's not that bad. But what's 4.5% relative to your account? Right? Because you could have 4.5% loss on one share. And if you have a large account, well, if you lose, it's not going to mean anything. But if you win, it's not going to mean anything. We want our winners to count, right? That's a very big part of trading. When we trade and we win, it has to count for something. Otherwise, well, what are we doing here? That takes a certain level of conviction. Now, I talk to a lot of people every day. One of the big problems that people have is putting on size. I had that same problem for a very long time. And the reason why I had problem putting on size is because I didn't have the belief in the system. I didn't have belief in myself. I didn't believe that I would be able to go off and execute. I had all the rules, I had all the plans, I read all the books. Heck, I even became friends with Mark Minervini. And for a long time, I still didn't have that belief in myself and what I was doing. The thing that helped me to finally turn the corner, right? Part of it, having good friends like Mark. Part of it, getting around other people like the people at the meetup groups and making friends and having other people that knew what they were doing around me. Part of it was tracking my own stats. Part of it was doing post analysis. Part of it was studying so much of not just the work that O'Neill did, the work that Minervini did, and so many others, but also studying my own trades. Also, the journaling and the post analysis, like we said, part of it is developing a plan, a business plan over time that's a working, living, breathing document. And it's from there that this happened just a few days ago, right? The 24th. Well, what is that? That's 2 weeks. To be able to go in with half my account on this trade. Half my account, that sounds like a lot. Yeah, it is a lot. But when you stand to risk 2% of your account, if this doesn't go your way, probably even less than that, right? Like that's the absolute worst case scenario. Just based on where the stop is placed. There's other tactics and strategies for playing defensively, but just based purely on where the stop loss is, to only lose maybe about 2.5% on if this went the other way, it's not terrible. So what happened here? What happened here? And what gave me the conviction to take this trade? Well, one, it was already on the radar, right? So it's already in my field of vision. But why take it there? And why have the conviction to go in with half the account on calls of all things? Number one, the group rank. Others in the group, not just Nvidia, but AMD, ARM Holdings, a number of others in the semis were already beat up, had a very similar chart to what we see over here on the weekly time frame, and many of them were starting to make the turn on that day. Number two, the general market. If we go and take a look at the general market on September the 24th, here's September the 24th. Market is behaving well. Number three, Plenty of other stocks are setting up, breaking out, and doing well. This could be Nvidia and the semis were potentially setting up to be the thing that could launch the next wave. Part of the evidence of that is a move like this off of the 50-day. And it's not just any random move off the 50-day. I don't want you to start thinking that. What I want you to think about is how price came in, right? Let's blow up this chart here, right? Zoom in a little bit. So you have a couple of things going on here. You have, get this part out of the way there, right? You have this whole section where price consolidated. Then you have it again over here, and then you start to tighten up right in here. Potential VCP action, right? Maybe it's a VCP, formal VCP. We need to ask Mark about that. Maybe it's not, but you at least have the VCP action happening in here. And you have an uptick in volume down here. A couple of other things that I like on this chart that all fit into my wheelhouse. And this is something else that's critical to how you're going to go off and do this yourself. Stick within your wheelhouse, right? There's things that I'm pointing out that I like. If you think that those things are garbage, don't look at them, right? Because if you go off and it's just like, oh, well, Mike said that he looks at the stochastics as prices breaking out and he sees the stochastics turning positive over here as prices breaking out. And that's one of the things. So I'm just going to go do that. If you want to do that, wonderful. Go test it out. Go test it out on 50 ideas at least. At least. I'd rather see you do 100. Go back test that and go cycle through charts. Go take a look at all your past trades and see how different things would work or would not. That's how you're going to obtain the real belief, the real conviction to be able to spot opportunities and take action on them. And take action on them in a meaningful way. So I buy there, and what happens? The next day, price jumps. Right? The next day, price lands up here. I'm selling a portion of my calls right here. Right? Selling a bunch right there. Why? Price is moving in my favor, right? Well, why not hang on? The reason why I decided to sell a portion of them is because when calls move, there's the price that's moving it, but it's also the time value. So when things are moving rapidly, the options market tends to spike rapidly. When price is moving fairly slowly, the prices of the options move a little slower. So I'm able to get a premium when price spikes up like that. So that's what prompted me to start taking off some of the calls there. At that point in my account, I'm probably up about 6% for the account, not just on the trade, on the account. Selling to strength right there. Hold the rest. Get my stop to break even. And when I say stop, I'm talking about mental stops, right? When I'm trading stocks, I will use hard stops every time. When I'm trading options, it's a little bit different. The reason why is because sometimes, not always, but sometimes the prices of the options are dramatically different than the price of the stock. Sometimes the options markets are moving differently than the stock. And I don't want to automate that part of the process. I'd rather have that part of the process be manual. It's almost like, most of us drive uh, cars. Just we have an automatic, and you put the car in drive, and that's it. Most of us aren't driving stick shifts, but every once in a while, it's helpful. That's what this is. I like to trade as a stick shift. That's the analogy there. I don't know if it landed or not, but anyhow, hold it sold there, holding the rest. The next day, what happens? Price gaps up again and gets to this level right up here, right at that descending trend line that we drew a while back. I see that happening. I see that as a logical spot for profit taking. I see that. I see the option spike again, and that prompts me to sell the entire thing. The reason why is because when prices jump, they tend to pull right back in, especially when they're right at a longer term level of potential resistance like this. And if I'm in an instrument where time value counts, I don't have time to sit through a pullback and wait for it to rebound. I'm going to be losing money on this, right? If I still had the calls, right? Like, so if I held the call, let's say that I didn't sell everything as it touched that line. Let's say that I held it and it's pulling back and then it rebounds and it's about where I sold it back a week ago. The value of the calls would be less than what I sold it for then, even though the price of the stock is the same as it was then. The reason why is because now there's a week's less of time value on those options. So with options, it's important when the money's there to take the money and run and to be able to know how to do that. That's what I did. And that's what led to a 13% jump in my account. Really in 2 days. Really in 2 days. If you count buying it right there, then three. But very quick jump, and that's what I did, how I did it, and why I sold when I sold, and what led me to take the sizing that I took. So, what questions do you guys have? Let me know what questions you guys have. Go ahead, type into the chat right now. One of the things that can help you, right? So, if you like this, you want to work with me a little bit closer. I see some of you guys from the group coaching program in the chat right now. I'm not sure if Alberto's here, but Alberto, if you are here, raise your hand, because Alberto and I were talking about this about a week or two ago, well, when it happened, right? And we have a weekly group coaching session. We call it our Insight Hour. And we meet on Google Meet. We open up the microphones, we have the cameras on, so we're talking face to face, and walked him through this trade step by step there. So if that's the kind of thing that you want, and you want to learn more about how you could go off and do this yourself, then join the group coaching program. I'll put the link in. Here's the page, what the page looks like. And you could go and learn all about it. So Let me know what questions you guys have. We've got 5 minutes here. See a bunch of people over on YouTube. I see a bunch of people over on X. Don't be shy. Get your questions in. Here's a question that came up during the uh, the Trading Mind Wheel webinar yesterday, and we didn't get a chance to answer it, but I want to answer it now. This question came in from Brandon, and Brandon asked, "How much capital do you need to withdraw $1,000 a week consistently?" And I thought that I would answer this question now because it ties right into what we were talking about here, right? So I was able to make 13% of my account in just a couple of days. Is that something that you think that you could do consistently all the time? Is it something that you think that you would have the conviction to do? Is it something that you think that you would have the skills to do? There's all different styles of trading out there. What you need to do first is learn the skill, learn the craft. Is it possible to be able to make $1,000 a week trading? Sure. How much capital do you need? A lot of it depends on you. A lot of it depends on your style. A lot of it depends on, well, let's say that you make 20% per year in your trading. Actually, let's bump it up, right? Let's say that you do 50% a year. It's pretty simple to do the math and normalize out what it would work out to. So the question to think about isn't how much do you need? It's more about looking at yourself and your system and seeing, well, what's the system capable of? What kind of returns is this the system capable of? Am I able to execute it? Have I developed the skills necessary to execute this system? If I don't have those skills yet, what will it take to acquire those skills? Big reason why I wrote the Trading Mind Wheel book over there on the shelf. Big reason why I wrote that is because most people don't even know the skills that are needed to trade well and execute just on a universal level. I talk about 8 essential skills in that book. They're essential because they're essential. You've got to know about mindset. You have to know about how to journal your trades, because if you don't have a good journaling process, then how are you going to be able to improve in your trading? That a big part of trading is learning and growing and evolving, and the best teacher is the market itself. If you have a if you're very organized, if you have a great way to take notes, if you're consistently doing so, then you're positioned well to be able to learn and grow. If you've got to learn how to analyze markets, right? And it's not that there's one holy grail or of analyzing markets. Some people only look at fundamentals, some people only look at technicals, some people look at the weather, right? It's whatever works for you. But one of the things that you could do is model success. So one of the skills that I talk about is testing. So what's testing? Factor modeling. So finding out what's out there that works and figuring out why it works, learning how to reverse engineer things, how to back test. So saying, okay, I've designed my set of rules here. What happens if I follow these rules? So you go, you find trades that fit there, or trades that you've already taken, or other models, put them into the system and see, well, what are the results? Forward testing, testing your system in real time in a small way. and doing that well. All those are skills inside the Trading Mind Wheel. So if you haven't read that book yet, I highly recommend that you go get it. It's available on Amazon. And it looks like we've got another question or comment. Let's see. Looks like a comment. Let's read it through. I know nothing about options. This is from Caleb. When do you think is the right time to start learning about options? I am probably not ready yet, but I wonder. Options are the most complicated tool in trading, most complicated asset in trading. The reason why is because you're dealing with both the price of the asset, and you're also dealing with time decay. You're also dealing with a market that is sometimes very liquid, and sometimes liquidity can dry up like that. So because options are so dynamic, it's something that's fairly advanced, and we need to learn how to walk before we can learn how to run. So I would, for anybody, right? The first thing is, so if you're interested in options, I would first learn how to trade stocks. Learn how to trade stocks well. That might not be the answer that you want, but it's the answer that's going to get you to the result that you're after a lot faster. And even if you want to be able to do what I did with Nvidia, the all the steps in the beginning, right? Let's bring up Nvidia again. Right? Let's bring up Nvidia again. All the steps in the beginning, analyzing the chart, even getting the stock on my radar, right? All that has to do with general analysis. Going through, seeing the group ranks and seeing what's happening in the general market. Caleb, yeah, you're in the group coaching program. That's the kind of stuff that we talk about all the time, right? As far as market mood, the general market, how the system is performing, personal performance, all those things play a factor in me selecting this. Sizing, right? How much we're going to risk, that's another skill in the Trading Mind Wheel. So all those things are adding up. The thing that's like, if we're building a fire, the lighter fluid is the options. You don't need lighter fluid in order to build a fire. Learn how to build a fire first, then do the options. If you're still figuring out how to light a fire and you're constantly burning yourself, and then options, hold off on it. Hold off. There's no rush. But when you are able to be consistent with trading stocks, when you have your model book, when you have your business plan fully laid out, well, once you're able to check off the more basic stuff, then it's time to start throwing some lighter fluid on it. And one way that you can is with options. What other questions do we got? Anything else? We're a moment or two over, but that's okay. If you guys have other questions, I'm willing to stick around for a moment here. In the meantime, I will put the group coaching back on the board. Here's everything that you get with the group coaching. You get the live group calls, you get the private community access. That's on Discord. You get access to Mara University. We've got many, many, many lessons in Mara University, and you don't have to wait to you could go through them on your own. Right now, we're doing one lesson. We're highlighting one lesson from the university in the private community, and we're going through it each week. So one lesson goes into the group. We discuss it, and then during the group call, we'll go through it there too and answer questions. And again, on the group calls, all the microphones are open. and we're having a real conversation. Then you get all the pro tools, you get everything all the indicators that I use. You get basically everything that I use, plus access to me and our group. And you get all of everything that's included in the Mara Elite research, which has to do with my trading plans, my journals, all of it. So go check that out. I'll put the link into the chat once more. And I look forward to seeing you guys in there. So I want to take a moment and say thank you all so much for being here with me today. It's been fantastic. And I will see you all next week. Take care, much love, and God bless. Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.